You've already gotten a mortgage for your home.
Okay.
And now I want to buy it. And so this is considered a secondary mortgage market in which I will go to your bank, who you're sending your payments to, and I will buy from them. Now you send it to us just for buying a home. Traditional home ownership.
Right.
Never
Conventional
mind
loans,
us buying in the secondary mortgage market and being sophisticated enough, and never mind having the opportunity to buy a mortgage that has already been created. These are usually brokered between banks to bank, institutional investor to institutional investor.
Correct.
And there are reasons for that. And so what I want to do is help you understand how you maybe can become an institutional investor and get in on the game.
Right.
These banks are making money to the tune that we have never seen before.
We are live here at the New York City Real Estate Expo. Now, for those who don't know you, tell me your name and tell me your profession, Jasmine.
Oh, well, thank you so much, first of all, Beast, for having me.
You're super welcome.
Yeah, I am a mortgage investor by trade. I'm also a general partner to a $50 million fund in which we invest in mortgage back securities. So we invest in the debt that many of us have on our homes.
Okay. Now, when you say debt, give me an example. Like, for example,
if any of your listeners have a mortgage on their home, which many of us do, at some point down the line, they're going to get a letter in the mail saying, please send your payments elsewhere.
So give me an example of a secondary mortgage, like an example of that. So that's one example.
An example, meaning that you've already gotten a mortgage for your home. And now I want to buy it. And so this is considered a secondary mortgage market in which I will go to your bank, who you're sending your payments to, and I will buy from them. Now you send your payments to me. So that's what happens when your mortgage gets sold. And so what I love to do is educate people on, one, do you know that the bank is selling your note? And have you ever thought why? And then have you ever thought, are they making money at it? And then maybe I want to buy one.
Now, don't forget to download my new ebook where I'll be providing the simplest steps on how to safeguard your critical documents through a loan signing after you close on your residential or investment property. Don't forget to download in the description bar below. Thank you so much for your support. Now back to this episode. So you can actually contest that, Jasmine. Is that what you're saying? A lot of us don't know that because when you explain it to me, we see it. We think that's the norm. That's how the industry works behind the scenes. But the customer has the right to know that. And let's say they dispute it. Is there?
No, I'm not saying you can dispute it. So let's get to go. You can't dispute it, but knowledge is a power. Okay. So one, every mortgage has a transferable clause in it, so they can sell it. Okay. But most importantly is that you are aware of it, because now this may be an investment strategy you want to employ. You have to understand how wealthy the banks are. You have them on every corner. Everyone wonders how they own the most real estate. They're most wealthy because of the mortgages. So I want to give us access to the same class of assets that banks have. And so while you can't buy your own mortgage, you may be able to buy other people's mortgages. But more to your point, if you're an affluent person, you can seek banks that do not sell your mortgage. So there are a few of them that won't, but they're really for those high-end private wealth people who would rather not have their mortgage sold. So it's possible, but it's nothing you can test. You have to qualify for a mortgage with a bigger bank who will say, hey, we're going to keep your mortgage for the entire 30 years.
Which leads me to my next question, Jasmine. How is that like secondary mortgages? Is that something popular in New York or just fully nationwide? Because I don't hear too many people talk about it.
The mortgage itself is huge. And just in 2020, over 19.3 mortgages were created, and all those end up in the secondary market. As far as where it is generally, anywhere there's a mortgage, from Hawaii all the way to New York, from coast to coast, all four corners of the United States is where I invest. So you're going to find obviously cheaper mortgages in Arkansas, Wisconsin, and those areas. Whereas I just bought a bridge loan, a mortgage in Las Vegas for $500,000.
Bridge loan. Go into that, a bridge loan.
So bridge loans are usually those short-term financing that people get when they cannot get another loan from the bank, but they have good credit. So banks will, because of your DTI, LTV, or maybe you have too many homes, they may not give you another loan. But some people are determined to get them, so they can go and get a bridge loan. Many people today at this conference are offering that opportunity. So you get a bridge loan from them, but those guys who offer the loan typically want to get liquid again so they can invest and give another loan. So I'll say, hey, let me review the loan that you gave so-and-so, and if it looks good, then I'll buy it and I'll become his bank.
So
you get your money back, and then he can start paying me on a monthly basis.
Very interesting. Which segues into my next question. And we're here, African American thought leaders driving real estate and diversity.
Yes, ma'am.
How important is diversity, especially coming from your experience, Jasmine? Can you please go into your experience?
I mean, how much time do you have, right?
We got a little bit of time, Jazz.
We're talking about the banking industry. So
let's get into it.
How much diversity is needed. It's you might as well just take it from the top. We need more than a little bit. It's not even enough to dent where we need to go. So
Really,
what I feel from the secondary mortgage market, there's even less. So right now we're all worried about the exposure to us just for buying a home, traditional home ownership.
right.
Never
Conventional loans,
mind us buying in the secondary mortgage market and being sophisticated enough, and never mind having the opportunity to buy a mortgage that has already been created. These are usually brokered between banks to bank, institutional investor to institutional investor.
Correct.
And there are reasons for that. And so what I want to do is help you understand how you maybe can become an institutional investor and get in on the game.
Right.
These banks are making money to the tune that we have never seen before, but I do believe we all deserve.
Okay. And right now you have some solutions to that. Like you said, number one is educating.
So, yes.
Go into that.
Knowledge first, just even knowing that it's possible, right? Getting curious, just basic things. But also, part of what I want to do is bring us into, so we are starting to buy some of these mortgages, because whether you know it or not, the big banks, they are really chasing after the higher end mortgage, the California mortgage, the guy with the perfect credit score.
Right.
But there is a home, and there are people out there who are looking to purchase homes in Alabama. Right, there might be a Wisconsin note. I buy those all the time.
Yeah.
So they're less.
Sunbelt states, Alabama.
Yeah,
Okay.
they're less offered by the big banks, so there's not as much liquidity chasing those loans, which directly affects how many loans are offered to that community.
Interesting.
And so when I think about how we can affect the diversity in this market, not only in the retail market, but from the secondary market, me bringing more liquidity to buy these loans once they're created will only encourage them to create more.
Which is really good, and I'm glad you are informative and pretty much just expanding on what secondary mortgages are, because you don't hear a lot. You might hear it here and there, but I don't see a lot of people like authority figures like yourself that's really practicing and also to educating people about that. And I really appreciate you coming to my platform and telling me what secondary mortgages are. Now, Jasmine, where can people follow you at? Like, tell me your social media. How can they follow? They want to reach out to you and your company.
My popular platform would be LinkedIn.
Okay.
Just look me up, Jasmine R. Willois, Willois.
Right.
French last name there. But I'm also on Twitter. Okay. My company is NPN Assistance, stands for Non-Performing Note Assistance.
Okay. And you also got a YouTube channel too, remember?
I do.
Right.
She said, do you remember? I have a podcast that's been running for 5 years. It's called the Naked Notes Podcast. And we call it that because we expose you to the naked truth about note investing, right?
Right.
Just like you said, there are people out there talking about it, but they're using all these big words and they're talking over people's heads. So it's not going to attract people like you and I. And the people that I feel can benefit from it the most. These guys already have their legacies going, right?
Right.
So I'm here to write in crayon and talk to you guys in a way that you can understand what's going on. And we have the capacity to do it. So it's just about taking it to eye level. So that's what we're doing here. Our podcast is Naked Notes Podcast.
Right.
And you can also find us on YouTube. We have a YouTube channel on the Naked Notes Podcast as well.
Absolutely. And I'm definitely, when we're done, we're going to also put your information up on our YouTube channel as well.
Beautiful.
So you guys can reach Jasmine.
Thank you.
Jasmine, thank you so much for coming by.
Can I bring it in?
Yes.
Thank you so much.